Hey, thank you for joining in today. It's KK helping you with financial planning. So this is part number 5, an emergency fund. So we're going to be talking about emergency funds today. And emergency funds are very simple. It's something that you have aside to help you with a large expense that would come. And you remember people always talking about putting money underneath the bed. And if you put money underneath the bed, it holds there. And just in case you need it, you can take it out. And this was the old saying. But in that old saying, we created a new saying called emergency fund. Now, you can hold an emergency fund within a tax-free savings account, which is a TFSA, or you can just hold it in an open account in your bank. But I would never suggest you holding an emergency fund in your checking account, because then you have too easy access to it to get to it. So an emergency fund can be used for, let's say you own a house and the roof needs changing, and that's $20,000. Where are you going to come up with $20,000? Or your air conditioning breaks. Well, that's another $5,000. Do you have enough money to have that? But let's say you lost your job. Do you have enough money to sustain that for 3 to 6 months? And that's actually what is recommended, to have about 3 to 6 months of expenses set aside just in case something severe happens to you. So when something does happen to you, you're able to access those funds and take it out. And what I see a lot is that people have a good idea of what they need. So they put $20,000 aside. And then about 3 months later, they forgot what it was for. It's for an emergency fund. But then they saw a nice new Camaro and they thought, oh, let me go buy that instead. And that's what they use the emergency fund for. And that's not what it's used for. It's actually used to be put aside in case of emergencies. So remember, you can put that into a savings account. You can put it into a tax-free savings account if you want. Either way, it has to be something that you're not going to risk. So I wouldn't put it into the market. I wouldn't put it into the stock market. I wouldn't put it into mutual funds either. I would just put it into an interest savings account. Therefore, you have those funds available, because God forbid that you were to put $20,000 in there, and then when you need it, the stock market would crash and there would only be $10,000 in there. And that's when you needed to really take it out. And this has happened to people. Trust me, it has happened. I've seen it. So please just use a tax-free savings account or a savings account, use the interest portion, and that's it. So I appreciate you guys watching. Hopefully you got some value out of this one. The next one I'm going to be talking about, we're going to bring it all together. So we're going to bring part 1 to part 5 all together, and we're going to mesh them up so that way you understand basically what a financial plan is. So if you found any value from this, please share the video, please like the video, and again, please subscribe at the bottom. And if you subscribe, please hit the little bell. That way you get notified when a new video comes out. I'll see you next time. Take care.